Hey, Alpha Fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over the massive dumping on the stock market, whereas Bitcoin and crypto more or less held the line, having broken out of its macro downtrend. It did, attempt to use that as support, which did buffer Bitcoin from the brunt of the force of this move. And of course, that isn't necessarily Bitcoin being particularly strong, as some people would incorrectly assign to it. It is just a function of where its support was underneath it, having just recently broken out of that downtrend, which of course the stock market did not do. Neither the S&P nor Nasdaq had done that, and so Bitcoin just had a little bit more support directly underneath it as buyers and sellers negotiate with that macro downtrend line. And additionally, that accumulation wedge that I had pointed out, providing a little bit of an extra layer of safety, which we will see how we wicked down to it quite dangerously, almost breaking it. But those little extra layers of safety did save Bitcoin's butt, and therefore also the rest of crypto, which would have followed Bitcoin down had Bitcoin had a dramatic fall. But in fact, Bitcoin did hold its place. Now, the problem with this is that if the buyers don't show up to just push Bitcoin up, and the fundamentals of the market are quite weak right now, so it's questionable who are the buyers right now for these risk-on assets. While the technicals, right, if we do technical analysis, it does suggest that there is the possibility for being oversold in the crypto market and in the stock market. One thing that we have to realize is that there is no such thing as being oversold in a downtrend, guys. You can't be oversold in a downtrend. In a downtrend, you can always be sold more, right? Like that's what a downtrend is. You get sold more. And so while you do have things like the RSI and whatnot that people look at for these type of quote unquote relative values, you can never actually gauge that accurately in terms of oversold in a downtrend. Now, you can be oversold in an uptrend. Think about it, guys. Think about it. In an uptrend, you can be oversold relative to your uptrend, right? So if you're moving up, then if you're oversold, right? If you're sold too far, then you're going to break your uptrend. And so, if the market's mood is for an uptrend, then yes, you can be oversold, and then buyers will come in to greedily scoop up those really delicious values, right? Because they want to continue the uptrend. But, guys, in a downtrend, you cannot be oversold. You can always be sold more. And so, those making the argument that the stock market or that crypto are oversold, they don't understand what they're talking about, because from a macro perspective, considering the whole super cycle, these assets are not oversold. These assets are only part of the way, in case of the stock market, and then, pretty good along the way in case of crypto, in terms of getting on track, right? On track for their macro uptrends, right? Because of course, Bitcoin has a macro uptrend overall, but if we're just looking at the month or the quarter or whatnot, right? We're in downtrends, guys. Like on the weekly, we are in a clear downtrend. And so we are not oversold yet for the macro. We are, however, oversold for the daily and the weekly and the monthly and things like that. But that doesn't matter. That doesn't matter to the market if the fundamentals are out of whack. Okay, like you can always be sold some more, because you're in a downtrend overall. And until the macro suggests that you're way oversold, then really there's no incentive for buyers to just dramatically scoop you up, except for perhaps a quick trade. And that's why those things are called fool's rallies, right? That's why a lot of degenerate apes, right, just get wrecked on those type of swings because they think that they're investing at good values, but in fact the fundamentals of the market suggest that it's not healthy at all. And so you do see the stock market just giving up all of its profits that it accumulated over the last couple days. The market has just taken it all back, right? And so it's almost like the last week didn't even happen because the market just took it all away based upon the fundamentals, even though the technicals suggested that a bounce you know, could occur should the market choose to go forward that way. We do see this contagion just spreading across the world, as of course the U.S. dollar is extremely important, as the U.S. economy is just extremely important for the world. And so the bad news that the U.S. market got for the jobs reports did, of course, trickle across the globe. And that bad report, of course, was that our average hourly earnings continue to increase, right? Continue to increase. It's not really being fought that well. We're basically still having wage inflation, okay? And so, and also unemployment rate actually dropped down, right? And so the Fed wants unemployment rate to increase. They don't want unemployment to decrease, they want unemployment to increase. And they want hourly earnings to go down to fight wage inflation. If wages are increasing, if more people are employed, then there's more money in the system to subsidize, right? To pay for those inflated prices and to subsidize inflation. And so it makes the Fed's job much harder. And so the Fed is probably going to interpret this as not good for inflation. And that's why we do see about 80% of the market now considering that the Fed is going to increase rates by 75 basis points, which is considered an oversized increase on the market, and which does have punishing effects on business and can potentially deepen a recession. Guys, this number was just basically 50-50 1 week ago. And so the market is really trying to decide how it's going to interpret the next Fed meeting, which is November 2nd. And so if 80% of the market, is pricing in 75 basis points, then if the Fed only increases 50 basis points, we could get a nice surprise pump, guys, okay? And why would the Fed only increase 50 basis points? Well, November 2nd is right before an election in the United States, right? And so the Fed may decide to go just a little bit easier because of the election. Now, if the Fed does that for political reasons, just to be friendly to the American system and to not be too heavy-handed in the middle of an election, essentially, then the market might irrationally interpret that as the Fed pivoting, and so there could be extra enthusiasm even though the Fed could come back in December or whenever and do something like a 75 basis points or 100 basis points increase at that time. And so, again, like there is no Fed pivot, guys. Like this is a myth, right? There's not going to be a Fed pivot unless there's a global financial crisis, okay? You guys do not want a Fed pivot. What you guys want is for the Fed to continue its course and to be successful in its continuation of its course of bitter medicine, okay? If the Fed is pivoting, that means that something got broken. That means that there is a global financial crisis, and that means there will be a very severe recession, a very, very severe recession, and that, you're going to have bigger problems than the stock market because the stock market will get devalued significantly in a global financial crisis. Okay, and that means that pressure will remain to the downside on price, even more than if the Fed is just increasing rates to tackle inflation. So again, guys, we're in that stagflation situation, and a pivot isn't going to mean anything to this market. A pivot just means a global financial crisis. Okay, so get it through your screwball heads. Okay, like the Fed isn't going to just suddenly change course. It's going to do what it's been telling us it's going to do for the last year, which is it's going to battle inflation and get it down to to attempt to get it down to 2 to 3%. I would suggest probably 2.5 is where they're going to compromise. They want to get it down to 2% or something, but it may not be likely. And then, of course, this is going to be quite a battle that goes on for quite some time. And so 2023 could continue to be a bear market, regardless of what the hopium of the addicted gamblers are in these markets. Most likely, we're going to have quite a bit of suppression on the charts for quite a long time and a real bear market. So we do want to take part in the rallies, the relief rallies, the sucker rallies, the bear market rallies. But what we don't want to be is trapped in any positions until we really do see an end to all of this. And the fundamentals are just not there yet, guys. And the technicals are kind of confused by the hopium addicts who think you can be oversold in a downtrend. Newsflash, you can't be oversold in a downtrend, okay, guys? You can always go lower. In fact, you can have a Great Depression level collapse of markets. You're not oversold yet, right? Like, if oversold in a downtrend made sense, then you could never have like a collapse of a market. But collapses of markets do happen all of the time, okay? And so we can reach a very dire bottom very quickly or very slowly. And, it doesn't matter what the technicals say in terms of quote unquote oversold in a macro downtrend because, we are just going to deal with the fundamentals right now. This is a fundamental trend. It's not a technical trend that we're dealing with. So, guys, with that out of the way, let's go ahead and take a look at the Bitcoin chart. You can see that we're still contending with this macro downtrend that we have here on Bitcoin. Of course, the macro for Bitcoin is up, right? Like this is actually a macro uptrend. But when I say macro, I just mean for our cycle. So I guess I could say cycle downtrend. But you know what I mean when I say macro, because we're dealing with these large swaths of time. And so when I say macro downtrend, of course I'm talking about the mid to long term here, not the full cycle or not the full history of Bitcoin. And so, of course, underneath this downtrend, we are looking pretty bearish as we just get slapped down over and over and over, just rejected, 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 rejected. And then we do have this secondary downtrend here, which is kind of acting as the intermediary, the replacement for this red line. When the red line isn't there, we have this blue line, which just rejected, 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 right? Like these things just love to slap us down. And so while we can say that we are getting wedged into a little corner here, and we did have a little bit of a pop out, we also had a pop back in, guys. Like we fell back in to our macro downtrend, and you can see right here that we're actually just being wedged underneath that macro downtrend once again, and it does look like we might pop up to reclaim this naked candle. And then maybe are we going to continue on our way? I don't know, but we still have this blue zone that we have to contend with, right? Which has been just as vicious as the red area in terms of how hard it can knock us down. And so we are still on high alert. We are still under threat of a severe rejection to the downside, especially if stocks, right? If stocks have a tumble down, most likely Bitcoin is going to be retesting its lows because of how it's starting to push back down under this macro downtrend, and how it remains repressed under this blue kind of intermediary zone here, right? And so guys, like, this isn't bullish. Like, we need to get above 21,000, right? We need to get above, some of these higher areas over here, at least over 20,500, and hold that very securely in order for us to start looking bullish. Right now, we are just retesting this accumulation wedge, which I had marked out for you guys, and we held it quite nicely, okay? So we popped out. We broke back down. We very, very dangerously flirted with the bottom of it. Look how perfectly on trend that wick was. That's just beautiful for how I drew this out on the lower time frames. That wick is just beautiful there. But for a while we were just trapped underneath it, and that did suggest that we could actually break through the bottom of it. We are finding a little bit of strength as the buyers in this wedge come back and decide, hey, yeah, we did mean to buy this. We were accumulating here. So, of course, we're going to buy at this point right here on this wedge, because that's the whole point of this huge wedge. We were buying every time you got into this, this demand line down here. And so, yes, we demand it. We want it to be at this level of a price at least, where these sellers, right, they are selling at this level, there, and people are buying at this level, and then the sellers got exhausted over here, and so pop, like, we just popped up, because of course the buyers were in demand, but the sellers got so exhausted, they just they didn't have anything left they wanted to sell, and so we just popped up. But then at this blue, right, at this blue supply line, you can see there are just sellers and sellers and sellers and sellers and sellers, right? And so the sellers in this blue, supply line, this macro resistance, right? They are just saying, okay, have my Bitcoin. I don't want to hold Bitcoin at these prices. I don't like Bitcoin along this trend. I want to get rid of my Bitcoin whenever it comes to this supply line. And so we did pop up there. We got a little bit of bad news on the fundamentals, and sure enough, those sellers just dropped their Bitcoin, right, like a lead balloon onto the market, which these buyers then picked up. And that's the psychology of the market, guys. That's what the real human beings are doing. They are just trying to see where they can sell the stuff that they got into, maybe at low prices. They want to sell it here. They got into it here. They want to sell it here. And so we're really getting wedged now in between this accumulation wedge bottom and this supply line, which is a kind of a macro resistance, kind of replacing this previous macro resistance. And so temporarily we're back under this yellow, but I think we're really contending with this blue zone. And I do believe that we've been contending with that blue zone for the last 6 months, whereas the red zone pretty much topped out over here, and then we kind of switched to the blue zone model. And so when people look at the macro downtrend for Bitcoin, I think they need to be a little bit more realistic that, in fact, this is our area that we're dealing with, right? Not this red area. And so they can be quite surprised. And the reason why this is important is that if you look at the date today, right? October 8th is tomorrow, right? So today's the 7th. And so if we look at 1 week from now, right, the 14th, it's going to be at the apex of that triangle, this wedge, with the blue one. The red one is just a red herring. The blue one is the real wedge that we're dealing with. And 1 week later, we're going to be at the edge of that one. Now, what happens in 1 week, Alpha Fam? Okay, well, if you don't know, let's just zoom forward on our schedule. That's Thursday, October 13th. That's the core CPI data, right? And so, look, we're going to get a measure of inflation on the 13th of October this month, where we're going to find out if inflation is actually stronger than we expected or if it's weaker than what we expected. And that could be the juice that fuels a run to the upside, right? Just a dramatic pump on a Bitcoin, or that just dumps us to hell underneath this very serious rejection zone that we have in this blue area. And so, guys, like I think this market has fooled a lot of you guys, has fooled a lot of the market into looking at this red downtrend. But the whole reason why I've spent the last couple episodes emphasizing this blue line is because I believe that we're getting wedged into a scenario where we have to make a decision with the CPI data that comes out on October 13th, and that this is what's going to choose our path for us, at least in a dramatic fashion. And we're just kind of flirting around with the edges until then. And so, no, Bitcoin isn't holding stronger than the rest of the market. Bitcoin simply had its macro downtrend underneath it to kind of buffer its fall. It had that accumulation wedge right under it to buffer its fall. So it had a couple layers of support that the stock market did not have. And that's just a coincidence on the charts. That's not really anything fundamentally strong about Bitcoin. Both Bitcoin and the stock market will probably be taking a very sincere turn when we get that CPI data next week. And so that's the story of the market. That's the narrative I need you guys to focus on, not whether or not Bitcoin is decoupling from the market or blah blah blah, what other people would like to talk about. And if we look at that in conjunction with the possibility of the Fed being more aggressive than expected or less aggressive than expected, then that can just add extra pop one way or another. And then, of course, one of our limitations is going to be the dollar, whether or not the dollar is pumping more towards 114 and does like a double top, or whether it breaks through 114 and starts to head towards 120, or whether we just kind of meander at 112 and then start to break down, letting easier conditions in the market. So, guys, those three things: CPI data, the size of the Fed rate increase right prior to an election, right? Which is a big question mark because you don't know if they are going to be politically nice or if they are going to be politically brutal. You don't know. Jerome Powell is a Republican. Joe Biden is a Democrat, right? The Democrats have more to lose, but again, Jerome Powell, the Federal Reserve chairman, he is a Republican, and he might not do any favors for Biden. He might not do any favors for the Democratic Party. So you can't just assume that the Federal Reserve is going to go easy. In fact, they may go hard because maybe they don't like each other. We don't know, right? We don't know the backstories of these people. And so, guys, I mean, Jerome Powell was basically put in power by Donald Trump, right? And so, should we just assume that the Fed is going to go easy on the market? I don't think so. I think more likely Jerome Powell is just kind of situated in his own seat right now. And I don't think that the politics are really going to be what's on his mind. I don't think he cares what the United Nations say. I don't think he cares what's happening in Japan or in the UK. I don't think he cares what's happening in the elections for Democrats or Republicans. I think Jerome Powell, in having kept his seat, being allowed to keep his seat for another term under the condition that he fights inflation, I think he's just going to go forward and fight inflation. And I think everyone who's looking for a pivot or some type of, just kind of breathing space from the Fed, right? Some type of a wait and see. I'm not sure that they're going to get that. Maybe they will because it is politics season, but I'm just not sure that they're going to get that. And so the size of the rate increase right before an election, and then the how the dollar is performing, and then the CPI data. Guys, that's a lot to contend with. And so if you see indecision in the market, well, that's why. the fundamentals are not supporting a massive rally right now until those three things are known. Until we have those three knowns, we cannot have a rally, no matter what your stupid technicals in terms of quote unquote oversold, in this technical market suggest, because that's a misunderstanding of oversold in a downtrend. Okay, we can always go lower. The RSI, the Stoke, all of that stuff can always hang out at the lows, and the price can just go lower. Okay, like we can be oversold forever. Like it can be infinite downturn all the way down to zero. You cannot be oversold in a downtrend. Guys, I will have a different tune on that if we get into a uptrend, but we just are not there yet. Let's go ahead and look at the key levels to watch for Bitcoin, because of course that is highly significant. Look at this. Look at my momentum zone, guys. I told you, like, look. I've been using this for several days now, right? This new system, and just look, like, right. I told you we broke down right into the momentum zone on a previous close. We weren't able to hold on top of the old one that we had, the one prior to this one, and so it was likely that we were going to swim around in it. And let's go ahead and move to a 4 hour just so we can get a little bit more detail. And so, what did we do? We just swam down in that, and then what happened is we actually ended up closing at the bottom of it. So this zone, like again, the momentum zone gets fought over, right? That's the reason why I've developed this principle that we're looking at here. The momentum zone gets fought over, and we did break down from it, and you can see we're trying to get back into the pool. And this is the updated one from yesterday, and the new one is quite something to look at, guys. This is our new momentum zone. Okay, so this one, you can see that we just drowned to the bottom of it, and I said, like, if we get to the bottom of that one, it's going to be extremely dangerous, and yes, it was. Look at this fall here, and we would have continued to fall if it wasn't for this accumulation wedge. So that suggested that if we lost the bottom of this momentum zone, we would have to be caught by some type of serious support. Now, as it happens, this accumulation wedge is very serious support. I mean, this was the accumulation that got us the pop to break out of our macro downtrend, right? And so this accumulation wedge is no joke. It's nothing to sneeze at, guys. We popped up and broke our macro downtrend off of this accumulation. And so if we lost our momentum zone, it could be reasonably expected that either we were going to hold down here where we have a lot of support. You can see all this support, 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 and then or that the accumulation wedge would catch us. Either of those two scenarios were pretty reasonable. And then we also have this kind of mid-channel radial that we have, this macro radial, which could have been support down here at around 18,500-ish if we had lost this level at 18,800-ish. But as it happens, the accumulation wedge did hold us, and so we live another day to retest the updated momentum zone. And we are trying to get into the updated momentum zone, on top of the updated momentum zone, which for tomorrow, right, because this zone is good for 24 hours, which tomorrow, this thing, let me just go ahead and delete the old one, which the range was almost perfect, guys. Bam, like that momentum zone, like, was true to advertising. And this is this is our really dinky new momentum zone. And guys, we basically just have to sit on top of this, and we're going to capture our momentum to the upside, at least for the day. Let me go ahead and turn off our macro downtrends there just so we can deal with this a little bit better. And you can see that that does seem to just coincidentally align with the top of this accumulation wedge. In fact, they're probably the same line. and it's just a momentum is telling me that as opposed to a price action. And so, guys, like this is very serious. If we hold on to the top of this, probably we're going to have another chance. Now, you can see the price action did just move in between our 2 to 5 day projection. For our previous projection. And so for 2 to 5 days, we're still alive. Guys, we didn't break below 19,050, right? So for the 2 to 5 day projection, we were still alive. Like there was no reason to be like uber bearish or anything. We hadn't lost any type of critical support. We were still swimming around in the pool of that 2 to 5 day projection. However, this one has also expired. I do have to update our our 2 to 5 day projection, which of course 2 to 5 day is just too long of a period. So I can't say it's the reality. It's just a projection for the next like a half week or so. And the projection for the 2 to 5 day does suggest. Look at this, we wicked all the way to the bottom of the new one, right? So like this one does suggest that we're on top of it. So for the next 2 to 5 days, probably we're okay, right? Like this projection is suggesting momentum wise, if we close today's candle above this level of 19,560, then probably we're okay. And then also the daily momentum zone is suggesting the same thing, except it's a 19,562-ish, right? Something like that. So if we close above this area, we're pretty good. Guys, if we lose 19,530, then it's just a weaker situation. And if we lose 19,283, then it's quite dangerous. Then you'll pretty much understand that we're going to have lost this accumulation wedge, and we're probably continuing to the downside. So those are your key levels to watch for Bitcoin above 19,565. Let's just call it bullish. Above 19,540, let's just say, pretty bullish. And if we get below 19,282, not good. And if we get below 18,925-ish, then really not good, guys. We'll have lost everything. And our actual momentum zone is a little bit higher than these levels. I mean, our MACD continuation zone is a little bit higher. So, and so is our weekly 4 EMA. So I would just suggest that really what we want to be over is 19,595. So basically, 19,600 is really the number that probably we want to beat. I can't just base everything on theory. We also have to go with the realities of the chart. So 19,600. And then if we look at that macro downtrend, right? The trend 2, you can see that actually we have this limitation all the way up here until 20,000. I mean, if we just go in a straight line up, 20,000, let's just say 500. And so 20,500 is really the uber bullish look, because we'll have broken this blue zone, right? But just on a daily basis, swimming in this garbage of this blue zone, which is this huge rejection zone, as we kind of build up over the next week to that CPI data, then at least you have the key levels to watch for tomorrow. Okay, guys? And then we'll do another update. Guys, let's go ahead and look at Ethereum. For Ethereum, the momentum zones, basically you can see that we did have this rising wedge that I had marked out here, and it did suggest that a rising wedge has a tendency to break to the downside, and this thing might not be perfect. It could be something like this, right? Just because of those wicks. Maybe this is just kind of a little fake out wick, just a little fake out wick. And so the price action overall was this rising wedge, and I was saying that Ethereum looked weaker than Bitcoin. And so what we did see is that it did break down from this rising wedge. It did stay. Look, guys, look at these momentum zones that I'm marking out for you. Okay, like look at this. Look at this, how it just like these 4-hour candles just walked on top of the momentum zone. We lost the top of the momentum zone, this kind of pool. It took a swim, right? Tagged the bottom to the dollar, guys. to the friggin' dollar. It tagged the bottom of the momentum zone, recovered its momentum, and we're just swimming around. So, that does suggest just kind of meandering. We weren't in any danger. Ethereum didn't lose any key level, right? I mean, obviously we lost this structure, but that's different than losing our momentum. We still have some momentum to the upside, some pressure to the upside, and so that's actually uh, pretty okay. Like as long as you're just swimming around, it's okay. You'd prefer to be on top of the pool, but if you're just swimming around in the pool, no problem. What you don't want to be is drowning at the bottom of the pool and then dead and buried underneath it, right? And so let's go ahead and get rid of that one. It just boom, guys. Like man, I love this new system that I'm making. Let's just delete that. Let's look at our new momentum zone. So this is going to be the one to replace it, and of course you can see that we are currently ahead of it, and as long as we stay above this level, we should be pretty good for the next day. As you can see, the previous 2 to 5 day projection, we didn't even get like halfway down it. So totally cool from the 2 to 5 day projected, perspective of that we made yesterday. And so, like, of course, we're living for another day. We didn't have any type of catastrophic drop or anything. We're just kind of moving around in the momentum zone. But now that we've had more time to tighten this up after this dramatic pump, right? Now that we've had more time to, tighten up those numbers, we can update the 2 to 5 day projection. And you can see it's a little bit more precarious than the previous one suggested. Of course, the previous one was blinded by this almost vertical pump here. But now that it's been moderated, we do see that in fact we're at the bottom of a 2 to 5 day projection. That's probably just because we had pumped so hard. There is more of a statistical likelihood for us to come down and retrace, right? That makes sense. What goes up must come down. This is a market, it's just constantly up and down. And so the new momentum zone projection for the next 2 to 5 days would be in this gray area. We really want to be above here. So what you can see, guys, is that sometimes this 2 to 5 day projection is above our daily pool, and then sometimes it's below, sometimes it's overlapping. And that just gives you kind of a general health perspective of the price action. And so what we can see is that if the 2 to 5 day is below our daily pool, then probably the price action is a little bit healthier. If the 2 to 5 day projection, this kind of a gray and white one, let me just update it because now it's our current one. If this one is above the daily pool, then that's less healthy, okay, guys? Because it's kind of like you're at the beach, but you have a bunch of fog coming in, so you don't get any sunshine or anything. It's kind of like the fog, right, at the beach. And so this is just suggesting that we have work to do, okay? And so you're to be a little bit uber bullish on Ethereum, you're gonna want to get above 1368, to just basically be pretty reasonably bullish. You're gonna have to be above 1330. And then if we lose 1323, then it's going to be looking pretty bad. And if we look at where our actual different types of momentum are. You can see MACD continuation ends at 1296. So we absolutely do not want to lose 1296. But overall, the key levels to watch for Ethereum, 1368, going to look very bullish. And then 1330, you're going to be, in charge of all of your momentum to the upside. You break down from a 1323, it's getting pretty dicey, it looks pretty bad. And then under 1296, you've lost all of your momentum, and it's just going to be a bad situation. Guys, let's go ahead and just take a look at our EMAs for Ethereum, because we were talking about a possible squeeze play on the daily. Just want to check to see if we've lost it. And yeah, we've kind of lost it. We've lost our squeeze play on the daily. And so what you see is we've lost the 9, we've lost the 4, we're underneath it. We really do have to recapture that area. And so that does correspond with, holding this as kind of a bottom line. And then also this 2 to 5 day projection. Hey, look at that. It matches up pretty well with the 9 and the 21 EMA. And so it does suggest, like, come on, swim up into this 2 to 5 day zone, and let's get elevated a little bit, because we're just looking a little bit weak here. Let's just take a look at Bitcoin on the daily, and Bitcoin's EMAs, almost the same exact thing. Okay, guys, just actually, this is weird. The 21 and the 9 are right on top of each other, so we're gonna have to wait another day just to see how that unfurls, guys. It's looking a little bit like this, and I don't like that, because this type of structure tends to have pressure to the downside. So glad I looked at that. But there's always hopium, right? There's always hopium. Guys, let's go ahead and look over at stocks, and we do see for the stock market, the S&P 500 E-mini futures, the ES1. We do see that we did lose our EMAs as well. For our momentum boxes, you can see we did break out of the momentum box, but we did play around in it quite interestingly. And so this momentum box was very suggestive of the area that we had to hold if we wanted to maintain our bullish momentum. And what this candle is suggesting, and let me go to the 4 hour just so we can see a little bit more of how price action worked. Yeah, you can see that we lost our momentum. We put up a really big fight to hold this area, like we were drowning. We fought for our life, but we just weren't able to. And so we drowned, and then we broke down underneath our momentum zone. And so having closed underneath that momentum zone, it really does suggest dangerous things for the next day, where potentially we could have continuation to the downside, or perhaps over the next week. You can see just how high our 2 to 5 day projection is above our head. This is actually what we needed to be above in order to look bullish on a higher time scale. In order to have that kind of relief rally, we had to capture above this zone. Again, you want to see the white box underneath the blue box. You don't want to see the white box above the blue box. If you're bullish, this just is upside down. And so, guys, we totally failed. We totally failed to hold our daily on stocks. We totally failed to meet the needs of our 2 to 5 day projection for the S&P 500. And interestingly, because we did basically recapture the whole move, um, we are just reset. Like this price action and this price action is very similar. It's just they're going in different directions. And so overall, from this area, we're just basically in the same region. And so tomorrow's daily, it's just like a couple dollars off. I actually calculated it. This uses different numbers than this one, but it looks exactly the same. So it's effectively the same, guys. Like, we have to get back into this pool, and then for our 2 to 5 day projection, we really do need to get above this area over here. And let me just recolor this stuff, because it's now our new one. And again, like, they look like they're the exact same boxes, but in fact, it's only because this price action was just a mirror image, and they are different by a few bucks. So again, like, guys, let's see, just the same as yesterday, effectively. You want to be uber bullish on the S&P mini futures. Here's the one that I'm using. You can figure out the equivalent for whichever index you're using yourself. But 3804 is the number to beat to be really bullish. If we can get above that in the tomorrow or in the next couple days, in order to be bullish tomorrow, we really want to be above 3758. Otherwise, we're just going to be swimming around our momentum again. And if we hold under 36.69, it does suggest continuation to the downside. So this isn't good, guys. Like, we're probably going to continue to the downside if we're losing 36.68. Do I have some momentum marking downs? Yeah, and so we have like this kind of really bottom line here at 35.84. Okay, so those are your key levels for the S&P 500. 38.06. Yeah, boy. Holding above 37, 55-ish, great. If we stay under 36.87, not good at all. Probably continuation to the downside. And then losing 35.81 would be probably catastrophic, guys. For the the EMAs are just wrecked, guys. They're just wrecked city. So nothing to really comment on that. Going over to the SPY, which is a different version of S&P. I just want to see if there's a gap over here. And do we have a gap on the 4-hour? We do. That could be what gives us some momentum to kind of fill in that 4-hour gap. But does it exist on the daily? On the daily, it does not exist. So that gap doesn't have to be filled too quickly. But those 4-hour gaps, those quarter day gaps, they like to be filled. So we've got like a 6-hour gap also, 8-hour, 12-hour. 16 hours of gap. So really only the day is filled. And so, yeah, this area around 370, around 370, price action may come back there to fill the gap, guys, on those lower time frames. It doesn't have to, but there's a good likelihood that it could try, right? Sort of like this wick. We didn't fill this one, so it doesn't have to, guys, but there is a good chance that we could try to. Let's go ahead and go over to NASDAQ. So for NASDAQ, we can see that, guys, it's the exact same situation as the S&P. Okay, so I'm gonna skip the explanation, and you can watch the S&P section there if you want to understand, how this price is moving through its momentum zone, why the prices are, the new momentum zone is exactly the same as the old one. Sorry, the gray is the new one. The white one should be up here. And we lost. The white box above the blue box is not good. You want the white box below it. And so this did suggest it was going to have a couple headaches to begin with. We did end up losing our support at the top of the momentum zone, probably because we're flipped upside down here. Swam to the bottom. We drowned. We weren't able to break back into our momentum zone by the end of the day, which means we were buried underneath the pool. And so then that suggested continuation to the downside. And then, of course, we have to update to a new momentum zone. And of course, because this price action is a mirror image of the one over here, it's effectively the same. The prices are slightly different. And so I will use the new boxes, not the old boxes. But if you want to get uber bullish in this market, let's go ahead and look for the NASDAQ NQ1 mini futures. Over 11,650, we're really going to be bullish. Above 11,540, we're going to be, reasonably bullish. If we continue to be below 11,200 and let's just say 75, then probably that implies continuation to the downside. So we really do have to get back into this momentum pool, guys. Look at our MACD continuation. Like we're really losing that. That doesn't always align with the bottom of my momentum box, but when it does, that's pretty serious. And so like we're losing our MACD on the daily, guys. That's not good. We do have our Stokes down here. It's kind of like a bottom line of defense around 10,000. Let's just call it 945-ish, just to average these two, the 2-day and the daily. And so those are your key levels for NASDAQ. Jumping over to the QQQ, another version of NASDAQ. Basically, we did, similarly to SPY, we opened up a CME gap. This one does exist on the daily, I believe. Yeah, that's a clean cut on the daily. Wow, that's an open wound. And you can see how we filled with a wick. This one over here, this gap. We could pop up wick to fill that and still be continuing on a downtrend. If you do see this kind of line that I've got kind of marked out here, like even if we wicked up, filled that gap, it could still imply more downside. So if the market just wants to chop around for a while, for a couple days, trying to extend to that CPI data day on October 13th, then filling this gap and just kind of like wasting time as we get wedged in here would be similar to what Bitcoin's doing, by the way. And so there's a little bit of an analogy there. But you could see that we could easily wait for the CPI data just by chopping around in this area. And then if the CPI data is in our favor, then boom. And if it's not, then black, right? Yeah. And so, guys, that's my interpretation of the stock market for you, and the psychology that's involved in there, as well as the various momentum. Jumping back to the NQ1, I do want to just see what the EMAs look like on it. And yeah, of course, we are losing that 9 and we are losing that 4 on the daily. So again, it's just broken structure. Let's see what we look like on the weekly. Of course, I have them marked out over here at all times, just to remind me where we are. But we do have a ways to go. And so checking back to 11,400 on the NQ1 NAS 100 really wouldn't be unreasonable, and that would possibly fill that gap. As for the ES1, same situation, right? We could pop up to tag the 4 EMA, and then that would be pretty reasonable. Guys, I'm just noticing. Let me just get rid of all these crazy drawings. I'm just noticing like we've lost the 200 EMA on the weekly on the S&P 500. So that's not good, guys. Like we've lost the 200 once again, and looking at Nasdaq, oh boy, we lost the 200 EMA once again. So not good. This suggests, we could be dropping down further, and what we don't want to do is turn the 200 on the weekly here into resistance, which it looks like we're kind of doing, and so that could be quite dangerous. I'll probably make an episode about the kiss of death on these things. So let's find out what's, because this is looking like a kiss of death setup, guys. So if you guys don't know traditional stock market, like uh, different type of patterns and things. There is one type of a pattern before a major kind of capitulation called the kiss of death, right? And it's not one that you really want to toy with, because it could be quite a significant drop down. Guys, I think I'm getting a little bit long on this episode once again. So let's go over to our risk factors. DXY just continuing to push up. I did suggest that we had a path, right? That we had a path to getting to 120, and that it would be kind of a fractal of our of our previous pump. And sure enough, we're putting in a kind of fractal of what we did there. So it's doing it quite faster than I thought it would. But you can see we had this pullback ever since I made this theory, right? I made this theory when we were right up here, and then I suggested there would be a pullback and then a pump, and then look what we got: a pullback and then a pump. And then I suggested that there would be a pullback around here, and we're already getting that pullback. So if we hold on to this yellow line, and that could suggest that we're going to bounce off of it and really have a downturn in the market. So just watch out, because this pattern over here could be replaying itself, and that could be dangerous. Now you can see we had a couple chops, right? We had a couple chops. I only marked out one here, but we had a couple of them before we had a push up. So we could go sideways a bit. But if we hold this level, then there's a chance that we can just pop up here as this thing kind of like bull flags, right? And makes these kind of head and shoulders that has this kind of measured move. And that would bring us up to a 114. And if we don't break down from 114 completely, then we'll in fact have created another head and shoulders out of this level, right? Here's the left shoulder, and then we could create another shoulder easily by getting rejected at 114 and then retesting it. And then simply we'll have made a shoulder, and then we'll have a head and shoulders with a measured move to a 118 to 120. And that could be quite dangerous for the market. I don't know how different economies are going to be able to handle that. VIX, I suggest that's just probably just popping back up. Of course, I did extend our wedge because, this thing is just kind of like taking its time. But this looks a little bit more natural, so, like maybe we keep coming up. And we're just waiting for the day that we really pop above these like 37 levels where we get to like 40. And then, or when we break down below this 19 level, right? So that we can have kind of either heavenly trading or we'll know that we're kind of capitulating, right? Guys, let's see, USDT. Again, it's just meandering around the zone here that I suggested it would just chop between. And this is starting to look kind of like a bull flag, like this thing. So I don't know. It could be a BART also. So let's find out. Do I want to go over all of these coins? Not really, because they've just reset from what they were doing. XRP is the exception. You can see that it did push and try to break out of this, this reset of its downtrend that it had. Right? I just kind of ignored this wick and I just reset it to the price action and captured that wick and then the wick we had just put in during the last run. And you can see XRP is challenging it and it wants to kind of break out. And so is it going to be able to do it? I don't know. Maybe it gets rejected the first time and then tries again. And then you can see kind of a head and shoulders here. So could it do it? I mean, maybe it can, guys. Maybe it can. I mean, it looks bullish, guys. It looks bullish. Bullish XRP, guys. But it's a bit late to FOMO in on this stuff. You don't want to buy at resistance. So either you took this move where my green box was, or you didn't, And I didn't because I expected it to actually happen like much later on. But as it happens, it just like flash tagged my green box and then went on its way. And then it put in, look at this lovely W, right? ADA just kind of hanging on to its line. I did add a second line here just to kind of give a little bit more context to what it's doing. And it's just kind of hanging on a little dangerously. It could test the bottom of this range if it's not able to secure above 42.6. And then I really want to see it above 44. And I won't feel too comfortable unless I don't know. I just prefer to see ADA up here as opposed to down here. It's underneath this whole structure and I don't like that. Okay? So it's postured to test lower. Okay, guys? I mean, this could be a fake out. There's always fake outs in these markets. Just retesting lows, shaking out the market and then they like go up, right? But as it's oriented, it just looks like it's slopping over, okay? So I just prefer it to show a little bit more strength, just in my opinion. Okay, before I'd be interested in it again. CRV, obviously, I was doing some type of a sports casting with it, but let me just delete this junk. Oops. And basically, I was suggesting that if we lose this area, we can slop down here. But if we hold that area, then maybe we can get a pump. Looks like we're just going sideways. So CRV holding its level quite nicely here. What is that level connected to? This area, I guess. And if it can pump off of that, then good. And then maybe it'll do a retest and break out, or maybe it just slops over. Okay, guys. So just going sideways here, and not looking terrible, but you know this this kind of wedge that we have here could end up just playing out, right? Where it just pops up here and then comes back down. So just probably take profit around that 98 cents area, in my opinion, not financial advice. KDA, we did get a nice, a little bit of a turnaround after that drop right at support. So we met this kind of resistance line that I had here. It's the only line that I had marked in white. I hadn't remembered why I made it, but since we tagged it and got rejected perfectly from it, I guess my logic was pretty strong on that one. I had forgotten that I'd marked that out, but yeah, we just dropped like a lead balloon, like straight down from there. Found support, and we're just kind of pushing off support again. Like ADA, this is looking a little bit weak to me. It looks like we're in danger of slopping over, right? Like I feel a little bit nervous about this. It does like anything could just kind of shake this to the downside. That would be a great buying opportunity, but I'm just not happy with Kadena at this level. I much prefer Kadena above a $1.50 and just showing some strength. Where these big bounces come from. I don't like it in just these like little wick area. Um, we've gotten a nice bounce off of that area before a couple times, but I don't know. It just looks like it's turning this line into resistance, and so I want to see us above it first, right? But anyway, that's just my fear there. Flux, just same thing as CRV, kind of meandering down, but holding a line, just kind of like a midline kind of thing. Not really a significant line, but just kind of holding a midline. It's pumped from there before. It's had resistance there before, so it's a valid support. But you're just playing around with it so much, and your momentum is to the downside pretty much. So unless we get a nice pump, up to like 88 and kind of hold up there, and then we can talk about the next level. I'm just worried that we could slop over. And where would I suggest buying Flux here? Maybe along this kind of a trend that we have down here, just ignoring that. If we go to log, you can see this diagonal that we have right here. And so really this is the buying area at the top of this box. And then if I take it out of log, the line shifts because log is just like funky on TradingView. And so that's why I would suggest maybe around 70 cents, right? Like that would be an okay area. Anywhere between 70 to 62 cents, like that'd be a you know, good DCA if you possibly want to just get a nice bounce. You can see we had nice price movement here. We had, a nice push up here. We had a nice push up here. And so this level, if it can hold it, would be pretty decent if Flux is rising. If Flux breaks down, then of course you probably want to wait for this level, like a 40 cents or 35 cents, something like that, right? Somewhere in this support area. But yeah, on top of this support area, there's no issue to just try to take a trade, but just understand that we could break down to this one. Okay. Again, not financial advice. I'm not trying to give calls or anything on this channel. Sometimes I just act silly about that stuff, but that's just silliness, man. I just am trying to understand the market. For ZIL, yeah, ZIL, same thing as Kadena and ADA. Really, you can see this level right here is the more significant level to hold. But we do get some nice bounces off of where we're at right here. We got a bounce here, got a bounce here. We had we used it as support also back here and here. And so this level is actually really nice. I can't really knock this level too much. It's just that we could fall down to this level down here or something, right? If we lose it. But so far, ZIL looking okay to me. Looking okay. No big issue with that right now. But your risk is probably 28 cents, and your upside is probably to 34 cents, 35 cents. Cpool, major retraction. Of course, I did suggest it. Do not FOMO into this one. That it does tend to have like just massive retraces, and we almost lost that level. I was getting a little greedy to consider to buy in, but we did just pump up to this green level that I suggested we might find support on. I don't know how enduring that's going to be. It's probably going to be up to Bitcoin. But the Cpool whales, I mean, they're not dummies. These are pretty smart guys. So They're always tending to front run the market. This thing was pumping before Bitcoin pumped. This thing was dumping before the stock market dumped. I mean, the Cpool whales, like, they're really in tune with the economy on the fundamentals. And so I consider this coin to be a little bit of a canary in the coal mine because as it was pushing down, like, these guys aren't idiots. Like, they pushed up on the bull market, and then right in November, right when the Fed suggested that they would start increasing interest rates, they just suggested that they might increase interest rates. This thing just tanked. Like, I mean, there's like bright people like in on this coin, and they knew that the fundamentals were going to change in this market. I don't know if they have economists working for them or what, or they're just closely associated with economists, but these guys seem to understand their macro, their whales and VCs. They knew what they were doing. They knew what they were doing, and they shook down the market for it. It's a kind of a scandal, right? Because, of course, this thing got pushed up to heck. There were, of course, brand ambassadors and stuff like that, right? You know, paying for advertisements, things like that. And so, should you be, you know, is that kind of like inside trading kind of stuff? You're like marketing something when you know you're going to sell it. Um, I don't like that, but you know, that's crypto for you. Guys, but on the other hand, you do see this kind of accumulation, and it got some kind of a pump here just at the bottom. Maybe we'll come back down, maybe not, but I like this coin just as a little bit of a canary in the coal mine for what's going on. Just gives me a little heads up from time to time. Qredo, similar, but not as sophisticated and also not as I don't know. Sorry for all my weird lines. I think I was on log scale. There you go. On log scale, it looks much nicer. If sometimes my lines just look like totally confusing, guys, it's just because it's log versus linear, and they just like give totally different looks. Um, but I do suggest this thing could come back down, and then if we get a bounce here, that might suggest something more interesting happening. So just to watch this space. Of course, it could get rejected to this lower level. This is kind of like this hidden basement on Qredo that we still have left to explore. And so just to watch out in case this thing does break down. Qredo can be a little bit sneaky, but another interesting coin for these like smaller caps. I do not recommend to get in on this stuff, guys. It's just a little bit too early, but you know, we got to watch to see how stocks go. We got to watch to see how the Fed is behaving. And I see that I'm over an hour now, so I should stop this episode. But thank you for joining me. Of course, I really appreciate your support. I know it's not easy to wade through all of this, but it does help me and motivate me when I do see likes and comments, and those few people who do follow the channel. I try to think about, you know, what might be useful for you guys. And so if you do have any comments of anything you'd like me to review, then please leave it in the comments, and I'll try to do a better job on those things. But if you don't do that, then I'm just going to try to improve my own style, and it could be wild and reckless, just because it's just me, like trying to improve myself. It's not thinking about any particular person's needs. But again, I do consider this a community. We do have the Discord. There's a link. It's free. You can just join and join in on the conversation. And if you want to be part of that community, then feel free to add your voice, and we can look at some of the things that you're looking at as well. All right, guys, that was your alpha for the day. Stay safe and happy trading.